Bear and bull markets explained, a brief guide to market trends. Do you have any idea about bear and bull markets? These two terms actually represent the market condition, whether it is going up or going down. A majority of investors make their decisions while keeping in mind the situation of the market. Hello 101 community! Welcome back to our YouTube channel. In this video, I'm going to talk about the bear and bull markets in detail. Before we begin, if you're new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Bear markets explained. If we explain this term in simple words, you can say that a bear market means that the value of stocks are going down. However, the question arises here, what would be the declining percentage so that we can call it a bear market? Actually, experts say that the market will not be considered a bear market until the value of the stocks plunges to about 20% or more from its recent peak. Most people start believing that the declining trend will continue, so this creates a panic. Some of them even sell their shares. There is no doubt that the market faces its worst position because most people lose their jobs as a result, and the GDP of the country also declines. However, the good thing is that the bear market does not last forever, and it can also become an opportunity for investors as well. We are in a bear market. The American economy faced a downturn of about 1.4% in the first quarter of this year. The Deutsche Bank was the first bank that predicted a recession. The value of these indexes are continuously plunging. The S&P 500 has dropped about 30%, the Nasdaq is down about 20%, and the Dow Jones has plummeted about 15% this year. So this news might not be great for many investors. And after these figures, many experts have said that we're in the center of a bear market. During the last 2 to 3 years, many youngsters have taken an interest in investing their money. A survey was also conducted in the year 2019. About 42% of people between the ages of 23 to 35 years in the US started investing for their future. Suppose you are also someone who has recently started investing your money in the stock market, and all of a sudden you find out that the value of the stocks is significantly dropping. You would become anxious, but there is a fact that you should know. A bear market is not a new thing. So this means that we are not facing it for the first time. You would be flabbergasted to know that there have been about 26 bear markets since 1929. And the most recent bear market was in 2020, when the pandemic situation put the economy of the US into a short recession. There is nothing to be worried about if you know how to react and respond to this situation. How do bear markets start? There might be a question in your mind about how the bear markets start. If we take a historic look, there have been some reasons that are really concerning to investors, and as a result, they begin to sell their stocks and try to get out of the market. One of the major reasons includes when they feel like the market is overvalued. This has already happened in the dot-com bubble, and most youngsters are not aware of this fact. It was a time when the world of interest was growing, and many companies started showing their existence on this platform. As a result, people became so excited and attached their values to these companies. But after some time, people realized that these values were not justified because they were going beyond imagination, like crazy high. So what happened next was unbelievable. People started selling their investments. This resulted in the burst of .com, and the situation of a bear market started. However, this is not the only reason why a bear market starts. There are many other reasons as well. For instance, when people start to be concerned about the economy of the country, as we have already witnessed a significant drop in the US economy in the first quarter of 2022. Moreover, the prices of commodities have increased a lot. Take the example of gas prices. Due to these concerns, some people begin to sell their investments. and many other people don't take an interest in the investment because they're left with empty pockets. In the current situation, people are also scared due to the news about the recession, and they don't want to invest in the stock market anymore due to the fear of losing money. Those who have shares also want to sell them off before they face a major loss. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. How to invest in a bear market. Now, this is the most important point here that you need to know. Despite the fact that there are uncertainties in the market and people are very worried about the situation, you can still invest your money in the situation. Doing this might look crazy to you, but actually, these situations can give you such a return that could be beyond your expectation. If you become the kind of investor who does not get panicked in this situation and does not care about the news, if you don't sell your portfolio, instead, you keep investing in this situation, soon you will see the best returns. Now, the question here is why you should invest when other people are selling their stocks. Actually, when people sell their stocks in a panicking situation, this brings the value of the stock down. Now, this could be the best time to get in, because you can buy the stock at a much lower price. History has witnessed a boom after an uncertain situation. You might be aware that the Fed has raised the interest rates many times this year in order to cope with the skyrocketing inflation, and the most recent hike was 0.75%. So whenever the Fed increases the rate, the stock market starts going down, even before the announcement, because many people predict it. You can see that the S&P 500, right before the main interest hike, was going down. Now, according to Bloomberg, after 12 months of the rise in interest rate, the markets are again beginning to move in a positive direction. This is not the first time that has happened, but in fact, this has happened about 8 times before. This data gives us the good news that we will see a great time again, which means that the indexes will grow again, and those who have made a wise choice will see a great return. Bull markets. The bull market represents a great condition of the market, which means that the economy of the country is moving in a positive direction. People don't have a fear of losing their jobs, and the prices of stocks are increasing. Investors believe that this market condition is favorable for them. We cannot say that the market is a bull market until we see a rise of 20% or more since the last slump. You might be thinking about why this situation is known as a bull market. This term came from the way a bull attacks. As you know that when a bull attacks, it tries to throw its enemy into the air. There is only one way to end the bear market, which is when people start taking an interest in buying stocks. Moreover, the prices of the stocks also come back to their position, and people don't have the uncertainty of losing their jobs. In this regard, the Fed is trying to perform its role in controlling inflation. The US government is also taking part in stopping the bear market. How investors can benefit from a bull market. When the stock market has reached its peak level, the best you can do is take advantage of the high prices. Like, if you have purchased stocks in the early stages of this trend, you can sell them when they are at their peak level. During the bull market, investors don't usually see any loss, so they become more confident and active in these circumstances. However, many investors have started believing that this situation will remain forever, which is not true. Nothing remains forever, neither a bear market nor a bull market. If we see from a historical view, the average length of a bull market has been 3.8 years since 1932. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you'll be notified of every update. Also, don't forget to check the links in the video description. And while you're here, click to watch one of these 2 videos appearing on your screen right now. I will see you there! Take care and stay tuned.